Focus on the markets now. We've got Ashi Anand from IME Capital joining in. Okay, let me invite Ashi. Thank you very much for joining in. I was just looking at your micro trends PMS portfolio, where the themes that you are focusing on is capex revival. You've got a few lending franchises like ICICI Bank, Kotak Mahindra in the fray, financialization of savings. So you've got HDFC, AMC, 361, consumer and chemical names. Any changes that you've done in the last 3 months in your portfolio, in your core holdings, in your thought process and stocks?
So the portfolio has been largely kind of stable, as in the idea is that it is a longer term portfolio focused on the slightly longer term evolving themes in terms of micro trends. But I think the one core change that we have made is capital goods is a space which had done extremely well for us. So we have undertaken some amount of profit booking and we've deployed that towards consumer. This is partly driven by the fact that monsoons have been decent. With the kind of election results, there is expected to be some kind of impetus towards social or consumption spends. And consumer as a category has been weak for the past few years. We're seeing some kind of a potential revival here. I think what we're also trying to do as part of this portfolio is ensure some level of a balance. What you saw last year is that all market performance was largely driven by a few specific sectors. This would be real estate, capital goods, railways, some amount of infra. Primarily the whole gross capital formation theme. I think that theme has run quite significantly. We're still very positive. We still continue to be overweight across these themes. But given the fact that valuations have moved up quite significantly, we are also trying to get in some amount of exposure to sectors like consumer, where we believe it is due for a catch-up. Another space that we are kind of looking at is IT. Our belief is that as we move towards the end of the year, and as interest rates start coming down globally and possibly greater signs of the economic revival globally, IT is a kind of a theme that could emerge. So broadly, the portfolio remains largely kind of intact, but we are tweaking around based on how markets are evolving.
Okay. Ashi, hi. Thank you for joining us on the show. Appreciate your time here. I was going through some of your holdings and you have a digital disruption PMS where one of your top holdings is Zomato. Almost 26% of the weightage is in Zomato. I understand where the excitement comes from because, you know, this quick commerce space is growing by leaps and bounds. But do you think we've reached a slightly mature phase of this growth in quick commerce, or do you think it's just the start?
No, so I think quick commerce honestly is pretty much right at the start, right? If you go back just a year and a half, people were very concerned about Zomato's acquisition of Blinkit and potential risks that would come in terms of capital deployment into quick commerce. I think that bet has worked out very, very well for them. And what you have seen is both revenue growth as well as profitability on quick commerce, I think outpacing definitely street expectations, but arguably even in terms of what the management was looking at. Quick commerce is still relatively nascent in India. So Zomato, which would be the leader, would have about 550 dark stores. There's still very large amount of areas within existing tier 1, tier 2 cities and the potential to go into smaller cities as well. It is a humongous opportunity. We're still in the first couple of years of this whole opportunity. You'd already see brokers like a Goldman, a Kotak, etc., starting to already attribute a higher valuation to quick commerce as compared to food delivery, just given the sheer size of the opportunity and the amount of spends. Spends on grocery would far outweigh kind of food spends in India, food delivery spends. So it is a very, very interesting opportunity. I think we're still in early days and we continue to watch this closely, but we see this as a very, very interesting long-term value driver for Zomato. And just one important element, when we launched the digital disruption PMS, one core part of the thesis is that once a company has developed a strong network of users on their platform, the ability to add on incremental new lines of service can add to a lot of optionality value. You're seeing that on kind of Zomato with Blinkit. They've also recently now acquired Paytm's kind of movie ticketing business to strengthen their entire outdoor or events-oriented business. This ability to add on new streams of business is something very, very interesting, not just for Zomato, but across the entire digital platform space.
But there is some concern in this quick commerce about increasing competition. Now, Zepto has had a big fundraising round. DMart is looking to launch its own. Flipkart is in the process of, ramping up its, quick commerce. Do you see price wars, taking place, or deep discounting to continue to gain subscribers and the kind of growth? And is that a risk to Zomato, according to you?
So given how nascent you are in this industry, right, as in quick commerce would probably not represent even close to 1% of overall grocery spends. I think competition and a large amount of competition can only help expand the space, get people more and more used to being able to order groceries and various other essentials at the click of a button to immediately get that. So that change of behavior is something which is very important. And I think more competition really coming in will only help expand the space. So that's not something that we are overtly concerned about. Given the fact that quick commerce is a very locally driven market, it may not be necessary to have very aggressive discounting. So now the important part is we're still in early stages of this evolving business model. You will see competition come in, you will see market shares move around, you will possibly see some amount of discounting, etc., to get people entrenched onto a particular platform. But none of this is concerning from a longer term perspective. What you are very clearly seeing is consumers willing to pay a premium to get groceries delivered in 10 minutes, 15 minutes, etc. And once you change that consumer behavior, it throws open a very, very large opportunity and a very interesting business for these platforms. Now, one other key point is we believe that a Zomato or a Swiggy, so Zomato would have over 350,000 delivery partners on the ground who are working effectively for them, have an inherent competitive advantage of having this delivery partner network pre-existing. And it's a big advantage to them because food delivery partners are primarily used during lunch hours, dinner, or breakfast. They have a lot of free time in the day, and this can be leveraged on the quick commerce platform. So we kind of believe that a Zomato, Swiggy have a natural right to win in this opportunity, and which is why we continue to be very positive on the space.
Okay, that's very interesting actually, how you put it. The other, in this digital disruption space only, since it's very interesting, right, the whole space, I wanted your thoughts on some of these other platforms like, say, something like a Nykaa. Over there as well in the beauty space, there's so much competition. You have about almost 13.5% holding there. I want to understand how that space is evolving, because now you've started, getting beauty products even on something like a Blinkit. I mean, so where does that leave the USP for someone like Nykaa? Just thinking aloud here.
Sure. Okay. So if I can, let me just answer this in a couple of ways, right? So the first is the overall digital platforms. What you are seeing is a larger value migration from traditional physical businesses towards online platforms. And this is a trend that we believe you're still in relatively early stages of. If you look at various underlying growth drivers, the way internet penetration has been shooting up over the last 3 or 4 years, it takes a certain amount of time for consumers to get more and more comfortable with digital spends. And this trend is something that we're actually only seeing accelerating going forward. If you go down another 5 or 10 years, the primary consumer class are going to be people who have been brought up with a digital ecosystem, with having used digital apps while they were in college, while they were in early schooling. All of this will drive penetration levels for digital platforms, according to us, to levels that a lot of people cannot really envisage at this point in time, and which is why, from an industry perspective, we believe this value migration towards digital platforms will actually sustain. Now, when it comes to someone like a Nykaa, if you really, and this is true for Nykaa, it's again true for a lot of other digital platforms, online BPC penetration in India is still kind of sub 10%. And this is a space, BPC itself as a segment is growing quite rapidly, and the shift is happening towards online. You will have other competition which is coming in, but it is competition coming into a large and a growing market. Nykaa, according to us, have some very clear rights to win. And this really comes around the whole mindshare that they managed to get with the consumer. Because, if you're buying something on Nykaa, this is going to be authentic products, so you aren't going to get fakes, etc., which is a problem with a number of other more horizontal platforms like Amazon or Flipkart, etc. The other core element is this very large influencer network that Nykaa has been able to build. And if you're looking at how the consumer is shaping up, a lot of consumption demand is now being driven by influencers, what you're seeing on social media, what you're seeing in other digital platforms, etc. And I think Nykaa is very well ahead of this particular game. And which is where you're seeing, despite the competition, they're being able to quite comfortably grow their BPC business, which has matured at well above 20-25% growth rates. And they've indicated that that could continue for the next 4 to 5 years. This very strong growth, along with the shift to profitability, is what we find so interesting across digital platforms.
Ashi, the entire digital disruption portfolio has played out very well for you. All these stocks have done well. You've got Zomato, Policy Bazaar, Nykaa, Naukri, Paytm, IndiaMart, Delivery, and so on. So clearly, you see upside in all these stocks, which is why it's there in your portfolio. But if you had to pick one stock, which in your portfolio, where you see a lot of upside from here on, which one would it be?
So that's difficult to answer. Honestly, we really see a lot of potential across all of these platforms, and there are very, very interesting stories in each of them. But what we probably believe to undoubtedly be the strongest franchise would be Zomato. And this is primarily linked to the fact that digital platforms derive their value from a network, and Zomato has a very, very difficult network to replicate. It's a three-sided platform. You have relationships with consumers, with restaurants, and with delivery partners. In order for any new participant to actually come in and shake this kind of a network is exceedingly difficult. So primarily linked to the core strength of the overall network, we find Zomato probably the purest play on the digital theme. But that said, we do see very similar things play out across other companies. Like PB Fintech, I think the level to which they entrench with insurers and the kind of ability for them to showcase the best offerings to customers, Nykaa's dominance in the BPC space, Paytm's potential longer term value in terms of financializations of savings. There are very, very interesting themes across these companies. And we really see this as a decadal opportunity. What we really believe from a digital disruption perspective is what you saw between 2010 to 2020, where you saw tech companies in the US vastly outpace all other sectors and companies. We believe 2020 to 2030 is really going to be the period where you see digital platforms really emerge. And towards the end of the decade, we expect a lot of these companies to really be part of the core large cap indices.
Okay, Ashi, thanks a lot for joining in. Appreciate your time here.